This real estate market is about to get weird. It already has been getting weird for a while. And with what's happened, I don't know if you've noticed the stock market in the last week, but things have been changing there with all the tariffs. There's so many moving parts that no one really knows where things are going to go. But we have the opportunity now to take a look back so far this year and see how things have been going. We're going to take a look at the first quarter. We're going to take a look at the month of March. I got the numbers here. And I'm going to show you why you can't always pay attention to the data that I'm giving or anyone's giving, because everyone talks about median price. And I'm going to prove to you that median price can be very misleading with the dynamics we have happening in the market today. You're going to want to take a look at this because it really is important, and it really gets to the point that real estate is very specific to your market, and your market can be geographical, it could be in terms of price, it could be in terms of type of property that you want. So you really need to talk to an expert. That's why we do what we do. Let's take a look at the data right now. Oh, by the way, we're going to see some data that shows you that there are people who are pouring money into this market. Some of you have been watching my videos. You saw the video I put out about a week or two ago where we talked about this. We're going to update it. We're going to show you a chart so you can actually see how much things are changing in the ultra luxe market, the top 10 percentile sales. Let's get to it. I've got my data in front of me right now. For the entire Big Island of Hawaii, we had 184 sales in the month of March. That is up 31 over March of last year. We had 52 condos sold. That is down 6. We have a net gain there of 25 units. That's for the entire island. Next, we're going to go to South Kohala and North Kona. We look at these very intensely. That's the market I work the most every single day. And it is the lion's share of the money that comes into this island in terms of real estate. South Kohala, this includes the resorts, Waikoloa Village, and Waimea. We had 18 houses sold. That's 5 more than March of last year. 14 condos. That's 6 less. North Kona, we had 39 houses sell, that's up 3, and 30 condos sell, that's down 2. So altogether, we have a net of 0 change from last year when we add up the houses and the condos for the month of March for both North Kona and South Kohala. Let's get to median price. This is where things get really, really interesting. The median price for the month of March for the entire island for residential properties is $630,000. That is an increase of 5.88% over March of last year. And the condos, the median price is $632,000. That's down 6.02%. So interesting that we have some mixed data on that. Coming down a little bit further, South Kohala, median price for a house for the month of March, $1,288,500. That is a gain of 39.3% over March of last year. That is significant. The median price for a condo, $719,000. That's down 30%. Small sample size on those condos. We're going to look at another piece of data in a moment. North Kona residential median price for the month of March, $1,525,000. That's an all-time high. We have never hit 1.5 million or above before. And the median price for a condo, $695,000. Those numbers are both up over previous years, but when we're talking about median price, the bigger the sample size, the better. So let's look at the year-to-date numbers, and we're going to get those by looking at the first quarter of this year. Median price year-to-date for South Kohala residential is $1,240,000. That is a gain of 23% for the first 3 months of this year versus the first 3 months of last year. That's a lot of sample size data to put in there, so that looks like it's really moving. Condominium, the median price for the first quarter, $1,045,700. That's a gain of 1.03% over last year. North Kona houses, the median price so far this year, so big sample size, guys, $1,420,000. That's a gain of 2.53%. And then condos, $694,500, a gain of 13.48%. Now I want to talk about this one really specifically. I think this is going to show you how you really have to take a close look at the numbers inside of the data to understand what's going on. Now, I'll tell you anecdotally, I've talked about this to a number of agents, competitors and collaborators that we have here in the market, and I've been talking about this for a good 6 months. It's easier to sell a $2.5 million home than a $500,000 condo right now. And that's really wild when you think about it. And the difference is that for the most part, the $2.5 million buyer is a cash buyer. They just have to look at the property, decide that they want it, negotiate it, and they'll write a check. Your $500,000 condo buyer, more often than not, is a financed buyer, and they have to take into account the interest rate, the debt to income ratio, can they afford it with the job situation, and those people are having a tougher time. So let's take a look at these condo numbers a little bit more specifically. We're seeing a gain of 13.48%. Don't think that necessarily means all condos are up 13.48%. We're going to look specifically at a condo complex called Islandwide, and I like using this condo complex because it's the largest one in town, so we're usually going to have a lot of data. So let's look at the sales of 2-bedroom and 3-bedroom condos from 6 months to 1 year ago. 7 sales that happened in those 6 months. And it looks like we had 1, 2, 3, 4, 5 of those were 2 bedrooms and 2 of them were 3 bedrooms. The median sale price was $520,000. But to get apples to apples, since we have 2 bedrooms and 3 bedrooms, let's look at price per square foot. And the price per foot was $626. So the closed value was $626 a foot for these closings 6 months to a year ago. Now let's look at the properties that are on the market right now. We're looking at 2 and 3 bedrooms. We have 13 of those on the market, so you can already tell we have an oversupply or high inventory. And of those, it looks like 1, 2, 3, 4, 5, 6 of those are 3-bedroom units. The median price of those right now is $548,000, but the price per square foot listed, none of these are in escrow. So these are all people who are looking for a buyer. Presumably, it would be foolish to think that all these are going to sell for full price. So this number is going to come down, but currently the price per square foot of the list price is $610 a foot. So lower than sales from a year ago. I think it's pretty safe to say that you're going to see a decrease of anywhere between conservatively 2 and as much as 5% off their current list prices to what they actually sell for. And remember, we went back, let's go back and look over here. Our median price was $520,000 sold last year. And now we see 1, 2, 3, 4, 5 properties listed under that looking for a sale, including my listing, Islandwide JJ204, best deal on the market, 810 square feet listed at $448,500. We have been getting showings and we're waiting for our offer on that. So there are some real opportunities out there. Now, why is it happening like this? You're seeing the median price go up, but if you look at certain individual condos, you're seeing the prices come down. The people who are buying the properties with financing are holding back from the market. The people who are buying properties with cash are going ahead and moving forward in the market. And I think you're going to see this continue. Right now, the stock market is in a bit of a free fall. And I am already seeing indications, and have been for a few months now, that a lot of people who have assets in the stock market are pulling out and selling and putting them into fixed assets such as real estate. You'll also see that gold is at an all-time high. They're taking their money out of the stock market and putting it into fixed assets that they can hold long-term. And they're doing that as a hedge, and this is a pretty common thing. So I think you're going to see more of that. But median price is not the average. It is the middle sale in a collection of properties. So if you have 30 properties for sale, and you have some that are at the high end and some that are at the low end and some that are at the middle, that median price is going to be, right there, the middle sale. And if it's an even number, the halfway point between the middle two. What's happening now is median price is going up, not because all values are going up, but because the properties that are selling tend to be on the higher end, these more cash buyers, and the properties that are sitting on the market are on the lower end and are the finance buyers. So that middle sale, the property that it is, has shifted to a higher end property than it had been in years past. So we're seeing median price go up on certain categories, certain market segments, but it doesn't mean overall that the market is healthy and that everyone's going up 13%, because as we see with Elite Ilani, some of them are going down significantly. There's an oversupply. There are many properties waiting for an offer. Let me double check my numbers here, but yeah, I am in this number, this 13 condos that are available for sale right now in Elite Ilani, there are 0 in escrow, 0. So we're seeing an oversupply in certain areas because the buyer profile for that particular property just isn't happening. It's a totally different story in this weird market on the other end of the spectrum. The next thing we're going to look at is the 90th percentile sale, the top 10% of the market over the last few years. And I've shown this a few times. Let's take a look at it here. This is for houses only. We're tracking the top 10%. Just a few months ago, in October of last year, so getting into the election, there was a lot of uncertainty, and the market pretty much froze. There wasn't a lot going on in this market in terms of sales, and the top 10 percentile was $2.4 million. Now, these data points are residential only, North Kona, South Kohala, going back 3 months, 90 days, and I update it every month. So pretty good sample size. And yeah, we had a $2.4 million was the top 10 percentile. It has been going up. We have seen a lot of money coming into this market on the ultra high end. For the first 3 months of this year, there were 12 or 13 sales over $10 million. The last 3 months of last year, there were only 2 sales over $10 million. So a lot of these people with a lot of assets are putting them into something that's going to hedge their risk against inflation or recession or both, unfortunately. So right now, that top 10 percentile is $5.2 million. So from the month of October until now, half a year, it has more than doubled. There is so much money coming into this market on the top end. I think you're going to start seeing that trickle its way on down, especially as people are getting absolutely hammered in the stock market this week. I wouldn't be surprised if there's a lot of people selling as we speak after the last 2 days, Thursday and Friday, and they're selling their assets that they have in the stock market. They're pulling it out to cash. Now they have this cash sitting. They need to do something with it. You could still have inflation coming with these tariffs adding to the cost of everything. So you're going to see these people maybe go into more real estate. Real estate has always been considered one of the very best hedges against inflation. So I think for a lot of people who do have the cash, they're looking to put it in. I will tell you that in my personal business, the amount of activity that I've seen on my website from my clients that are in the $2 million plus range has definitely increased. It's noticeable. I'm getting more inquiries to see properties. I'm getting more inquiries about properties. I'm getting more people asking me what I'm seeing out here on the ground. So I really do see this sort of thing changing. Now, the thing that's happening that's really weird right now, and I think is just unpredictable, is that we're going to obviously see an increase in the cost of new construction. Luckily, we don't have a lot of new construction, I guess. I guess it's luckily out here on the Big Island, but I know on the mainland you're going to see new home sales prices going up. That's going to have an interesting impact because what happens is, since it's going to cost 4 or 5% more or whatever it turns out to be to buy a new home, a lot of those buyers are going to decide that that's just too rich for their blood and they'll go buy an existing home. So you could actually see an increase in the cost of housing for existing homes across the board, unless the market or the economy is tanked so much that people are feeling uncertain and they just hold on to their money and they don't make purchases. It's really tough to see what's happening. The other thing that's happening that is really kind of weird, I was expecting that the mortgage rates would be coming down a little bit more aggressively based on what's happened in the last 2 days. The mortgage rates have come down a little bit, but they're still over 6.6%. The market overall has come down, I don't even want to know how much. the stock market has come down in the last few days, and I think a lot of you don't want to know either. But the rate of decline in mortgage rates is not matching the rate of decline in the stock market. So that's been a little bit disappointing. I do think if the mortgage rates drop, down to the low sixes, and I mean low, 6.1 something, I think you could see a lot of people re-enter this market. I do still think there's a lot of pent-up demand, but it is really weird. It's going to be tough to figure out exactly what's going to happen. So what I will say to you, if you're a potential buyer or a potential seller in this market, is be ready. If you see the right opportunity come for you based on what you've been trying to do, be ready to pull the trigger, because you could have just a window. You could see interest rates come down and hit 6 point something that is attractive to you. But then as long-term data comes in and we see inflation coming up possibly, you could see interest rates tick back up. So I think we're going to enter a time of some pretty extreme volatility, and it's going to be important, if you're looking to do something, that you take advantage of it quickly. If it looks like a good time to sell, you probably ought to sell. And if it looks like a good time to buy, you probably ought to buy. And you ought to recognize that those windows might only last 2 weeks, 60 days, who knows? It is a very fluid situation. There is no playbook for this. The economists can all think what they want to think, and I find that most of them think something that confirms a bias that they already have. But we're going to have to be really paying attention to this stuff to move forward. So yeah, if you have specific questions about any specific property segments, always reach out to me. I'll be happy to help you. I hope you found this useful. I look forward to giving you more information in the future. As always, reach out to me if you have any questions whatsoever. Hit like and subscribe, because the algorithm is getting brutal out there right now. YouTube has changed things up on us creators, so definitely could use your support. If you're not a subscriber, check to make sure you are, and hit the like button, and we'll see you again next time.